Welcome to the Gold IRA Education with Jeffrey Tan podcast, where I cover the world of gold, gold IRAs, money, and investing in a concise and enlightening manner. So, this is episode number 2 of this podcast, and the topic for this episode is how physical gold held in an IRA is different than a gold ETF. So, to quickly introduce myself, my name is Jeffrey Tan, and I have been an expert independent gold researcher for over 20 years. And so I have thoroughly researched the gold IRA industry also for more than 10 years, and I have performed very deep investigative research on over 140 gold IRA companies in my lifetime. So I've been an independent gold researcher for over 20 years. I've thoroughly researched the gold IRA industry for more than 10 years, and I've performed a very deep investigative research on over 140 gold IRA companies in my lifetime. So I know what I'm talking about when it comes to the topic of gold and gold IRAs. And so, of course, now having said this, nothing I say here is financial investment or tax advice. And I'm only sharing information that I have learned over more than 20 years as an expert independent gold researcher. So, of course, if you want financial investment or tax advice, please consult a financial investment or tax advisor. And I'm only sharing information that I've learned, and any decision you wish to make or not make is your own responsibility and is completely up to you. Okay. So just to get started, I would recommend that you just get a completely free gold IRA guide that is written by the best and most trusted gold IRA company from my research that I found over 20 years of independent gold research. And so this free gold IRA guide will explain everything you need to know, and will also answer any questions you may have about gold IRAs. And so this is the best guide I have seen in my lifetime personally, and this is the best guide available anywhere, in my opinion. And so also, when you get this free gold IRA guide, you will get free access to the top gold IRA experts who will provide you with personalized support and help over the phone. And also, they'll answer any questions that you may have. And this is the best guide I've seen in my 20 years of independent gold research. And also, within that span, I've looked into gold IRA companies for over a decade, and this is also the best guide I've seen within that span as well. And so, to get this free gold IRA guide, simply just go to the web address. The address is bit.ly slash the best gold guide. So to spell that address out, that address is bit.ly slash THEBESTGOLDGUIDE. So bit.ly slash THEBESTGOLDGUIDE. So all the characters are lowercase and there's no spaces anywhere. So again, that address is bit.ly slash the best gold guide. And to spell that out one more time, it's bit.ly slash THEBESTGOLDGUIDE. So that address is bit.ly slash the best gold guide. And that's the best free guide I have seen. And so feel free to take a look at that. I would encourage you to take a look at that. So again, within that web address, of course, all of the characters are lowercase. So all of the characters are lowercase, and there's no spaces anywhere. So all of the characters are lowercase, and there are no spaces anywhere. Okay, so now first of all, let's define exactly what a gold IRA is. And so a gold IRA, which is also known as a precious metals IRA, it's basically a self-directed individual retirement account, or an IRA for short. And that allows you to hold that gold IRA then allows you to hold physical gold, silver, platinum, and palladium within a retirement account. And you're holding this physical gold or other precious metals like silver, platinum, and palladium within a retirement account. And you're doing this instead of holding traditional assets like stocks, bonds, or mutual funds. So it's basically an IRA that is backed by precious metals. Okay, so now let's also define what a gold ETF is, because the topic of the show is to explain differences between holding physical gold in an IRA compared to holding just owning a gold ETF. Okay, so a gold ETF or exchange traded fund, so ETF stands for exchange traded fund. A gold ETF is a type of investment fund that allows investors to gain exposure to gold without having to physically purchase, store, or insure the gold themselves. And also, investors can buy and sell gold ETFs the same way that they would buy and sell a stock. So if you want to buy a gold ETF, you can just find a stock symbol for that, and you can just buy that ETF, and you can sell it the same way. So basically, you can trade a gold ETF the same way that you could buy and sell a stock. Okay, so now the topic of the show is, how is physical gold held in an IRA different than a gold ETF? So let's look at the key differences. So I'll describe the differences as they relate to several key different categories. And so first, let's look at how they differ in terms of the nature of ownership first. So regarding, so let's look at the nature of the ownership and the difference in the nature of ownership between owning physical gold in an IRA compared to owning gold ETFs. So when you own physical gold in an IRA, you basically have direct and tangible ownership. And so essentially, you're the direct owner of real, actual, tangible gold bullion, coins, or bars. And so basically, you're not owning any shares that just represent gold or just some contract tied to gold price. You actually own the gold yourself. Also, if in a properly structured physical gold IRA, the gold must be what's called allocated and also segregated. And so allocated means that it means that gold is specifically identified as belonging to your IRA and your account, and is not part of a general pool of gold. And then segregated means that it's stored separately from other assets in a depository. And so the gold is usually stored in depositories. So the gold needs to be allocated, meaning it's specifically identified as belonging to your IRA, and it needs to be segregated, which means that it's stored separately from other assets in a depository. Also, your IRA holds legal title to the specific gold bars or coins. So you're the beneficial owner within this tax advantage IRA structure. And also, you have control over the type of physical gold you hold within that IRA, and you can choose between different types of gold bars, gold coins that can have different weights and so on. Okay, and a lot of people also have some psychological satisfaction as well, knowing that they possess a tangible physical asset. Okay, so now let's look at gold ETFs and look at uh, how that relates to. Let's look at how the nature of ownership corresponds regarding to a gold ETF. So, what's the nature of ownership? What is the nature of ownership for a gold ETF? So with a gold ETF, basically you have indirect or just paper ownership, and that's basically when you buy shares of a gold ETF. And when you buy shares of a gold ETF, you're not buying physical gold. And basically what you're doing is you're buying shares in a fund that holds physical gold. And actually, in some cases, they might actually hold some gold derivatives, such as gold futures and contracts, and then they're actually, there's a fund that actually just has gold futures in it. And so basically, your ownership is quite indirect, and you own shares of the fund, and the fund in turn owns gold. So it's kind of like a derivative ownership. It's a you don't have direct ownership. You're owning paper, and that paper shows that you have some shares within a fund, and that fund owns gold. Now, if you're a shareholder of a gold ETF, like you own some shares of gold ETF, then basically, you basically have you basically don't have a direct legal title to the gold, and so you don't hold actual legal title to any specific physical gold within the ETF's vaults. So the ETF itself, they will hold the legal title to the gold, but your claim is against the ETF entity, basically, and not directly against the gold. You just own the ETF, and then the ETF itself holds legal title to the gold, but your claim is against the ETF and not directly against the gold. And so, also, you do not control the specific gold that the ETF holds. So basically, So basically, you're buying a standardized product, as in the ETF, and you're not selecting individual pieces of gold yourself, if that makes sense. And so the fund managers of the ETF decide what gold to buy and how to store it, and they will do that within the ETF stated objective. And also, gold ETFs conceptually can be quite abstract in their in what they are. So basically, you're trading a financial instrument that tracks the price of gold, and the physical gold aspect is somewhat removed from your direct experience. And then so, sometimes though this abstraction can make them quite convenient, as many people can access them, and also they're easier to trade. Okay, so now let's look at another category of how gold. Let's look at how physical gold in IRA differs from a gold ETF in another category. So let's look at the category of storage, security, and custody, and let's see how physical gold held in IRA differs compared to a gold ETF within the category of storage, security, and custody. Okay, so for physical gold in an IRA, basically you have mandatory external custody. So basically, the IRS requires that physical gold within an IRA must be held in an IRS approved custodian and stored in an IRS approved depository. And so you cannot just store that gold at home. And so basically, it must be stored within an IRS approved depository. Now, that actually can be beneficial because these depositories that you need to store the gold in, those depositories are very highly secured. They have very specialized vaults, and they're operating companies that specifically focus on the safekeeping of precious metals. And so they have very robust security, and also they have very robust security measures, which include, for example, they'll have armed guards and security personnel 24/7 in a depository, and also they have very advanced surveillance systems, and they have vaults with very very heavy uh, layers of security. So they have vaults with very heavy layers of security. So basically, those vaults would have reinforced concrete. They have steel, and they would be very very secure and have lots of concrete, lots of steel, lots of they're made of very strong material to prevent any chance of theft from those vaults. And also, those depositories go under regular audits and compliance, and so they're audited regularly uh, that to make sure that everything is operating properly. And also, the access to the physical gold itself is highly restricted and is controlled by the custodian and a depository. And so, uh, basically, it's very, very secure and is very, very, is there's almost zero chance of theft or anything. It's as secure as it could reasonably be. In it's as secure as as you could reasonably expect it to be. Now let's look at gold ETFs as it pertains to storage and security and custody. Now, the thing is, again, remember for gold ETF, the fund or the company that runs the fund deals with the storage and the custody themselves. So basically, the physical gold that's backing gold ETF is stored by the ETF issuer, and typically it's in vaults. They're located in major precious metals centers like London, Zurich, also in New York. And basically, the issuer contracts with a custodian, which is often a large bank or security firm, to manage the storage and security. Also, ETFs tend to store gold in extremely large quantities because the funds tend to be, like at least tens or hundreds of millions of dollars in market value, and sometimes even higher than that. Right? Usually, at least hundreds of millions of dollars in market value, and sometimes even much higher than that. And so they have to store gold in extremely large quantities, and in the form of basically in the form of very very large deposits. And then basically this allows them to store that gold on average. This allows them to store the gold for a lower price per ounce because they're stored in large volumes in these depositories. So the cost of storing and securing the gold are basically factored into the ETF's expense ratio, and so you basically, without knowing it, you're paying for storage indirectly through this annual through an annual management fee when you buy a gold ETF. And so while you don't see a separate bill for the storage, these costs are part of the overall expense. And obviously, if you're a shareholder of an ETF, you do not have direct access to the physical gold held by the ETF. So you can't just take physical delivery of the gold from a typical gold ETF. Okay, so now let's go to the next category. And the next category will examine how physical gold held in IRA differs from a gold ETF in terms of liquidity and trading. So let's look at liquidity and trading and how that category is different when you look at physical gold held in an IRA compared to a gold ETF. So how do gold ETFs differ from physical gold held in an IRA when you're looking at the category of liquidity and trading? So for physical gold held in an IRA, the liquidity is lower compared to gold ETF. And so basically, if you want to basically sell your gold held in an IRA, there's steps you have to take. Like you have to initiate a sale with a custodian. You have to find a buyer, and then also basically after that, then you have to you basically have to settle. You have to settle the trade. Basically, you have to settle the sale. There can be delays in transactions, and also you have to deal with physical delivery when you're selling when you decide if you decide to sell the gold in an IRA. Now, so what this means then is if you're buying a gold IRA, the best way to approach this, the best psychological way to approach this is you need to think of the gold you're buying as a long-term investment. If you think of it as a long-term investment, then you don't really have to worry about the lower liquidity of gold in a gold IRA compared to a gold ETF. So the purpose of the purpose of a gold IRA is to hold most of the time. It's to hold a gold as a long term investment. Now, if you have a long term investment mindset, then the lower liquidity issue of a gold IRA is really not that big a problem. But it depends what your mindset is. If you want to trade really quickly in and out of a position, then a gold ETF is probably better for you. But if you want to invest in gold, if you want to invest in physical gold in a secure way for the long term, and you have a long term mindset, then a gold IRA might make more sense. So regarding liquidity for gold ETF, yes, a gold ETF is very highly liquid and is very easy to trade. Basically, they just trade on major stock exchanges, and you can just trade them just like stocks. So basically, during any stock market regular hours, you can buy and sell them very quickly. And so the trading is also instantaneous, and then so you can buy and sell the shares, almost instantaneously. Usually, if you put an order in, they'll be filled within seconds in your brokerage account, and also all the transactions are just settled in cash. So you don't have to if you sell a gold ETF, obviously you don't have to deliver any physical gold. So the liquidity with gold ETFs is very, very fast. And so if you are into trading the price of gold, basically, then a gold ETF makes more sense to you. I mean, a gold ETF might make more sense in that situation. If you're into long-term investing, then basically owning physical gold might make more sense. Okay, so now let's look at another category regarding how gold ETFs differ from gold held in an IRA. And let's look at the category of counterparty risk. Okay, so how does gold differ from a gold IRA? Pardon me. How does owning a gold ETF differ from owning gold in an IRA as it pertains to counterparty risk? Okay, so let's look at first physical gold in IRA. So technically, there is a depository risk, but it's very, very, very low. So there is a theoretical risk of depository failure or theft, but the facilities that the gold is held in, if you're holding gold for an IRA, those facilities are highly regulated and insured, and the insurance should cover losses in most scenarios if something bad does happen. And also, of course, when you're choosing a depository, you want to do proper due diligence to find a reputable one. Now, also, Now, also there is technically a custodian risk, and but again, basically what a custodian is it's a regulated financial institution. It's a financial institution that you're dealing with regarding Gold IRA, and so generally custodial agreements are designed to protect the IRA assets, and the risk for a custodian, the custodian risk is generally pretty low. But of course, you want to do a lot of due diligence before you choose your custodian. Okay, so always do your own research. Always do a lot of due diligence. Just make sure that the person, or rather the institutions that you're choosing, are as reliable as possible, based on other people's experiences, based on what you can research. Okay, so also the physical gold in IRA tends to have lower counterparty risk overall, because since you own the actual physical gold, the counterparty risk is theoretically lower compared with ETFs in terms of the gold itself. So if the custodian or depository had issues, then your claim is on specific segregated gold instead of just ETFs, which is based instead of just corresponding to like the all the gold that an ETF holds. So you would have a claim on specific gold that corresponds to you, so to speak, that you own in a segregated way, and so you have lower counterparty risk overall in the terms of gold itself. Okay, so let's look at the risks associated with gold ETFs. So theoretically, there is an issuer risk associated with gold ETFs, and that issuer risk means that the ETF issuer could become insolvent, like if they become bankrupt, or they could face financial difficulties. Now, while this is highly unlikely for large, major, reputable ETF providers, it is still a theoretical risk, and the ETF structure is designed to be, very, very, very. It's designed to be very, very unlikely to have bankruptcies. So, meaning the gold is held in trust and it should theoretically be protected, even if the issuer fails. So, basically, generally, people holding ETFs most likely have very low risk due to something like a bankruptcy happening. Although there's a small chance, but generally the risk is pretty low. Also, the ETF relies on its custodian, right? And so it has its own custodian, which is usually a bank, and it relies on this custodian to securely store the gold. And custodian failure theoretically is a risk, although these custodians are typically large and stable institutions. And a gold ETF theoretically has slightly higher counterparty risk compared to owning physical gold in IRA, because basically you're investing in a financial product, and basically you're investing in ETF shares that owns gold, and there are more layers of there are basically more layers and counterparties involved than owning just the physical gold directly. And so basically, then theoretically, you could say that this could be seen as having a slightly higher, you basically have a slightly higher complexity, potential for structural counterparty risk, even if the risks are generally considered low for well-established ETFs. Okay, now another category. Let's look at another category. Let's look at tracking error here. So let's look at the category of tracking error in terms of physical gold held in IRA versus gold ETF. So basically, what tracking error means is that so if there's a gold ETF and their goal is to basically track the price of gold. So for example, if you own a gold ETF, what the gold ETF would aim to do is basically track the price of gold as close as possible. So for example, if say in a given day the price of gold goes up by 2%, then in an if the ETF was structured perfectly, then the price of the gold ETF would also go up by 2%. So basically, tracking means how accurately the gold ETF mimics the price of gold. So a perfect tracking would be if would be that the exact percentage that perfect track would mean that a gold ETF would go up or down by the exact percentage that the physical price of gold goes up or down in a given day. So the gold ETF aims to track the real physical price of the physical gold, and so the better that tracking is, then the less the tracking error is. If that makes sense. So gold ETFs are looking to track the percentage change in the price of gold um, on on any given time period. Okay, so basically, so given that, then regarding tracking error, obviously, if you hold physical gold in an IRA, there is no tracking error because you own the actual physical gold. So the price that the value of your assets is, the price of the gold that you own. So you're not tracking it with something like an ETF. So basically, there's no concept of tracking error when you own the physical gold itself because you actually own that gold, and the gold you're holding is directly tied to the spot price of gold. Basically, of course, plus or minus any dealer markups or premiums, but generally there's no tracking error when you're owning the physical gold. Now, if you look at gold ETFs, for example, so gold ETFs have the potential for tracking error. So the gold ETFs aim to closely track the price of gold, but there can be some tracking error, and this again, this tracking error basically corresponds to the difference between the ETF's performance and the actual spot price of gold. And for example, the tracking error can arise from from issues such as, for example, so what contributes to tracking error? So, for example, expense ratios can contribute to tracking error, and so the expense ratio itself reduces the ETF's returns slightly compared to pure gold movements. Also, tracking error can arise from operational costs, from basically, and also tracking error can arise from market premiums or discounts, um, or 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 other reasons. Like basically, if if you have an instrument that is trying to track the price of gold, there it will not be able to track the price of gold exactly 100% of the time all the time because it's not the instrument is not gold itself. It's only a financial instrument that's trying to track the price of gold the best it can. So because of that, you're always going to have some tracking error because you're trading a financial instrument, and you're not trading the physical gold itself. And so as a result, then you have some tracking error from things like because of expense ratios or operational costs, or things like that. But there's other reasons as well. Okay, so let's look at the next category and see here. I'm just thinking here what the next best category would be. What's the most important? What's the most important here? I'm thinking of all the things that I've looked at over the last several years regarding these two types of investments. Which is the most next important category to go with? Okay, let's look at. I think probably an important category to look at is let's look at the tax implications. And let's just say hypothetically that you're holding both the gold IRA. Rather, let's just look at the situation where basically you're holding you're holding gold in an IRA, right? And also you're also considering holding gold ETFs in an IRA. So let's look at a situation where the gold ETF is in an IRA, and also your physical gold is in an IRA. So let's compare the situation where hypothetically, right, you have either a gold ETF in an IRA structure, or you have the physical gold in an IRA structure. So both you're comparing having equally you're comparing having either a gold ETF in an IRA structure or physical gold in an IRA structure. Okay, so if you're comparing that the case where the gold ETF and or the physical gold are both in an IRA structure, then you would have the same tax advantage treatment within an IRA. So basically, both physical gold in an IRA and gold ETFs held within an IRA will benefit from the tax advantages of the IRA structure. And of course, the tax advantages of the IRA structure correspond to tax deferred growth in a traditional IRA and also potentially tax free growth in a Roth IRA. And so, as long as the assets remain within the IRA, there's no immediate tax impact from price appreciation or transactions within the IRA. Now, of course, there's going to be taxation upon distribution, and this corresponds to both the case for gold ETFs or physical gold, or this corresponds to both the cases whether you're looking at gold ETFs held in an IRA or physical gold held in an IRA. So you will have taxation upon distribution. So when you take distributions from your IRA, of course, then when you take distributions from your IRA in retirement, both physical gold distributions, if you were to go through the complex process of taking physical delivery of the gold, and also cash distributions from selling gold ETFs will be taxed according to the IRA's tax rules. And so, of course, this is expected when you're dealing with IRA accounts in general. That's expected. Okay, so basically, the um, why some long-term investors often prefer holding a gold IRA if they're long-term investors, and they enjoy holding physical gold. One reason they enjoy holding gold in the gold IRA is because um, not everyone, but many investors who want to invest in gold actually want to own real physical gold and not just an ETF that's trying to track the price of gold. Of course, everybody's preference is different, but if you want to own real physical gold, then for many investors, at least, who want to own real physical gold, they will tend towards a gold IRA. Also, if they have a long-term investment horizon and they're thinking long term, then also they would usually prefer gold IRA. Um, Now, taking the flip side of that, right? If someone is a short-term trader or they invest more for short-term purposes, then obviously going with a gold ETF is much more convenient. It's much more convenient because for a gold ETF you can trade it very, very quickly. So it depends on what you're looking at there. Okay. So those are the key differences between owning gold, physical gold in an IRA compared to just buying a gold ETF. Okay. And so, of course, also, again, please remember to get that completely free gold IRA guide that's written by the best and most trusted gold IRA company. And this is the best. This is the best. This is the best gold guide in general that I've found from over 20 years of independent research an independent gold as an independent gold researcher. So this free gold IRA guide will explain everything you need to know, and will also answer any questions that you might have about gold IRAs. And this is the best guide I've seen in my lifetime, and is the best guide available anywhere, in my opinion. And also, when you get this free gold IRA guide, you'll get free access to the top gold IRA experts who will provide you with personalized support and help over the phone, and they will answer any questions you may have. And so I've looked into the gold IRA industry for over a decade now, and these are the very best, most trusted experts in the entire industry, and they have thousands and thousands of 5-star ratings. Okay, so to get this free gold IRA guide, just go to bit.ly/thebestgoldguide. And so spell that address out. That address is bit.ly/thebestgoldguide. So all the characters are all lowercase and there's no spaces anywhere. So again, that address is bit.ly/thebestgoldguide. And to spell that out one more time, that address is bit.ly/thebestgoldguide. Again, all of the characters lowercase and there's no spaces anywhere. So again, that address is bit.ly/thebestgoldguide, all lowercase. Okay. So thanks for listening. Tune into this podcast regularly for new episodes where I will provide the most crucial. So basically, please tune in to this podcast regularly for new episodes where I provide the most critical information on the topics of gold, gold IRAs, money, and investing in a concise and enlightening manner. Okay, have a wonderful day now. Bye-bye.